You're tuned in to Tax Talk DC with the Office of Tax and Revenue. Join us as we offer insights on the city's tax initiatives, share important resources for residents, and get answers to some of your most pressing tax questions. Now, here's your host, Jennifer Valentine.
Hello, and welcome to Tax Talk DC, where we break down the tax topics that matter most to you. I'm your host, Jennifer Valentine, and we've got another great episode lined up for you today. Joining me are two Office of Tax and Revenue Audit Division experts, Mustafa Elevli and Florence Sam. We'll be talking to Mustafa about voluntary disclosure agreements, or VDAs, what they are, how they work, and how this OTR program can benefit you as a taxpayer. Next, we'll be diving into OTR's tobacco tax program with Florence Sam. So let's get into it, DC. Hi, Mustafa. Thanks so much for joining us today to share important information about OTR's VDA program. First, can you tell us a bit about yourself and your role at OTR?
Hi, Jennifer. My name is Mustafa Elevli. I am the supervisory tax auditor. I've been OTR for more than 15 years, and I oversee the VDA unit and also some audit cases.
Okay, thank you for that. And can you explain to our listeners what a voluntary disclosure agreement is and why the Office of Tax and Revenue established this program?
A voluntary disclosure agreement is a written agreement in which taxpayer discloses and pays back District of Columbia tax liabilities plus interest and files returns for a limited number of prior tax years, which we call look-back period.
Okay.
And then in return, the District of Columbia or Office of Tax and Revenue completely waives the penalties and agrees not to assess tax and interest on the, periods other than the look-back periods.
Okay.
Like, for instance, let's say the taxpayer wants to disclose 3 years corporate franchise income tax return, and then under this agreement, we are not going to look for beyond that 3 years look-back period.
Okay, understood. And you gave an example of corporate franchise tax. So what types of taxes can be included in a VDA with OTR?
That's a good question. Other than the taxes under the Real Property Tax Administration or qualified high technology companies, taxpayer can come forward for the voluntary disclosure. For instance, I give you the example again for corporate or unincorporated business franchise tax, sales and use tax, personal property taxes, and like withholding taxes. Those are all can be disclosed under the voluntary disclosure program.
Okay, so now that we know what a VDA is and what tax types can be included, let's talk a little bit about eligibility. Who can enter into a VDA, and what would prevent someone from being able to take advantage of the program?
So a taxpayer who has not previously filed tax returns with or made tax payments to the District of Columbia, or has not been or is not being audited by the District of Columbia,
okay,
and has not otherwise had a prior contact with the District of Columbia Office of Tax and Revenue concerning a tax obligation is eligible to be considered for a voluntary disclosure.
Okay, so let's talk a little bit about benefits. Can you describe some of the benefits of entering into a VDA?
Yeah, this VDA voluntary disclosure agreement minimizes the expenses and expedite the resolution of the tax liabilities. Disclosed periods are protected from the audit. In most cases, the look-back period will be the 3 years. OTR will not assess any penalties and late fees on the disclosed periods, and primarily all electronic process.
Okay, and I think this sounds like a beneficial program for taxpayers who find themselves in the tax situations that you've described, but how would I go about applying for the VDA?
Yeah, the taxpayer or taxpayer representative applies online through mytaxdc.gov. And under the website, we have a section called Submit VDA. then they can click that one and then, enter the information, necessary information.
Okay, and is that the only way to apply?
That is the only way right now, because in the past we had like a paper filing and etc. But since we have the modernized tax integrated system, which we call MITS, we changed the process. And as I indicated before, is all electronic process from start to end,
Okay. Now, who should I contact if I have any questions or if I need to make changes to my VDA request or to the agreement after it's been established?
Yeah, the taxpayer may contact the voluntary disclosure unit at vda@dc.gov. And, we review that emails, or we check the emails every day or daily or, during the work hours.
Yes.
And then we respond accordingly. Taxpayer may have any question related to like initial VDA requests or any question regarding filing a returns, because some returns, like we have sales and use tax return, can be filed electronically, but some returns like, taxpayer cannot file electronically, like income tax return on unincorporated business franchise or corporate franchise tax returns, then they can submit those returns through via email. And then, we will send them the return processing administration to process.
Understood. Okay. So is there anything else you'd like to share about the program? Anything important you think our listeners should know?
Yeah, the voluntary disclosure program is a great program to bring, all tax liabilities, or, if you want to bring the account to current.
Yeah.
That's a great tool. And the most benefit, I think, is the look-back period, which, if the taxpayer has established nexus in the District of Columbia last 10 years, but under this program, they can come back for just 3 years.
Yeah.
And then disclose those periods, then we are going to consider them in compliance. And then going forward, they need to, continue filing returns. The one catch over here is that if the taxpayer has collected sales tax or, the use tax or withholding taxes, then the look-back period is not going to be 3 years. Look-back period is going to be whenever the taxpayers started collecting this sales tax.
Yeah, that makes sense. And just to backtrack a little bit for those who might not understand, can you explain nexus, please?
The nexus means like you have a, going activity or business in the District of Columbia.
As per the sales tax example.
Exactly.
Okay, yes.
Exactly. And especially after this, the DC Superior Court case, Wayfair, the nexus is like a broader term, which online retailers, online sales or marketplace facilitators also has an obligation to file sales tax. And, the recent years we had, lots of marketplace facilitators and or internet sales.
Yes.
They are coming under the voluntary disclosure agreement.
That makes sense. Okay. Thank you so much for sharing that valuable extra information about the program and for talking to our listeners today.
Thank you.
Next up, we have Florence Sam, who's here to talk about tobacco tax. Florence, we appreciate you joining us to talk about this program today. Please tell us a little bit about yourself and your role at OTR.
Hi, Jennifer. My name is Florence Sam. I'm a senior tax auditor. I work for basically the tobacco tax division, and I've been working with them for the past 16 years since I've been in DC government. I also, right now, I'm currently the national chair for the FTA tobacco tax section under the federal administrators, tax administrators, and I have had a lot of learning process with them. I have grown in my tobacco taxes. I've learned how to do inspections to the best of my ability and also to train my peers, which makes it very rewarding.
Well, I think we have the right person here today to talk about this program. Please tell our listeners what DC's tobacco tax program entails.
Well, the tobacco tax program is what mandates district law that the Office of Tax and Revenue enforces the tobacco tax laws for contraband cigarettes and for taxing other tobacco products. The program also includes regular investigations of any violations related to cigarette tax laws, auditing wholesalers, which is what I do primarily as the senior tax auditor for tobacco tax, and ensuring the DC cigarette tax stamps are complying and support the efforts of the Office of Attorney General and also the Office of Chief Financial Officer to comply with the Master Settlement Agreement, which brings in a lot of money into the district.
Understood.
The program has three primary goals for cigarettes that are to eliminate the sale and or possession of unstamped cigarettes, to eliminate the sale and distribution of counterfeit and non-DC tax stamp cigarettes, and to eliminate the sale of gray market cigarettes in the district.
That's very important.
Very.
Yes. So talk a little bit about the licensing and regulatory requirements for wholesalers to sell tobacco products in DC.
The requirements for the DC wholesalers, distributors, wholesalers to sell cigarettes and other tobacco products are as follows.
Okay.
They must register their business with the Office of Tax and Revenue in person or online on mytax.dc.gov to create your own account. And it's under general sales, services business, you check cigarette retail on the form. And then you also have to apply for the cigarette license from the Department of Licensing and Consumer Protection, DLCP. You must file all returns, the FR 467 monthly return, the FR 467E quarterly return, the FR 1000Q quarterly return. All taxes must be remitted to the District of Columbia when due.
Okay. Now, what are the current tax rates for cigarettes and other tobacco products, or OTPs as they're referred to? And how frequently are these rates updated or changed?
Currently, the tax rate for cigarettes is $5.03 for the cigarette tax stamp.
Okay.
That does not include the amount of the manufacturer's cigarette. That stamp is our tax rate.
Right.
That is affixed on the top of the cigarette pack.
Okay.
Now, for the other tobacco products, for this year, it is 71% of the gross.
Wow.
But we update, it is annually updated and changed, the rates. Like, for example, for 2025, it has been updated by legislation.
Okay.
As such, the little cigars that is currently 0.2515 rate has now increased to 0.2535 for the fiscal year effective October 1st, 2025.
Okay.
Now, the roll your own tobacco, the vapor products, and all other tobacco products are left at 71%. That will drop to 64% effective October 1st, 2025.
Okay.
So there are annual changes to the rates.
Yes. Can you let our listeners know when the OTP tax returns are due?
Yes. Like I had mentioned earlier, we have 3 returns for the OTP that must be filed. Now, the first one is the FR 467, the monthly return. It's filed as calendar year, and it's remitted on the 25th of the following month from the date the tax period is due.
Okay.
Like January is February the 25th.
Right.
You must submit that return. We also have the FR 467E. It's a quarterly return, and it's on the calendar year basis. So we have the first quarter. The return is due the first month on the 20th after the quarter.
Okay.
That means for January to March, which is the first quarter, the return is due April 20th.
Yes. Okay.
And then the last one, and the most important, is the FR 1000Q return, the excise tax return. And that's on fiscal year basis.
Okay.
And the return is due, since we say fiscal year basis, that means the first quarter is October to December. As such, the January 21st, the return is due.
Understood.
Yeah.
Okay. And back to cigarette tax stamps that you mentioned earlier.
Yes.
What is the process for purchasing those, and which DC agency handles that process?
To purchase the cigarette tax stamps, is handled by the Office of Finance and Treasury. And they sell those stamps to the taxpayers, and the stamps are handled by them.
Okay.
But we can go a little further.
Okay.
After they buy the stamps and probably the business ceases operation in DC, they're able to file a stamp redemption for the stamps. That way they don't lose. It's either the stamps are destroyed, they can get their money back for it by getting a refund of the stamps that have been destroyed or are useless to them because they're ceasing business in the district.
Right.
But if they're not ceasing business and they sell those cigarettes and they're destroyed for one reason or the other, they can send it back to the manufacturer who will now issue them an affidavit. And they can send that to me. I'm the only one who handles the cigarette stamp redemptions.
Okay.
And I can process it in the system. Everything is filed online. Process it on the system, and then they will get a credit, which they can use towards the next purchase of stamps.
Understood.
Yeah.
Okay. Now, you mentioned earlier that in your role, your new role, you got some great training on inspections.
Yes.
Tell us a little bit about the procedures for cigarette inspectors, what they follow when they're addressing cigarette-related violations in the district.
Okay. All cigarettes must be seized at the point of inspection. And that means that they must include singles, when the violations involve singles, or like we call it, loosies.
Yes.
And that's what's very common
Yeah,
in the
I've heard
district,
that term.
loosies. When they have unstamped cigarettes, those are cigarettes that are supposed to be sold in the military bases only. They're not supposed to be in the district with retailers, where we find gray matter cigarettes. And those are export-only cigarettes. This is where violation takes place. I'm showing you different stages of violations.
Yes.
And then where we have non-tobacco directly, we have a directory and we have the number of cigarettes that are supposed to be sold in the district. Now, if we don't see that cigarette on our directory, it is a violation.
Okay.
We also have the counterfeit stamps, where we have non-DC stamp cigarettes. That's Virginia stamp cigarettes, Maryland stamp cigarettes, are violation in the district.
Yes.
And so the inspector will immediately process the cigarette violation assessment letter for the taxpayer.
Okay.
And that taxpayer is supposed to sign on that letter. The inspector must make sure it's completed properly with all signatures. The taxpayer and the cigarette inspectors must sign that, and they must completely fill that form stating where the cigarettes were found, what did the taxpayer do, what did they say, who owns the business, what do they do when they are delivered the cigarettes. If they check them, they're supposed to inspect them. But if they don't, and we find a violation, they're responsible. And then the violations are subject to a civil penalty of 500% of the cost.
Wow.
That means if we find 150 packs of cigarettes, we're going to multiply the 150 packs by the cost of the cigarette, maybe $11 times 500%.
Yeah.
And that goes really high.
Yes, it does.
Or we find them $5,000, whichever is greater, depending
Right.
on the violation. If it's lower than 100 packs or higher than that.
Okay.
And then the other thing is that the taxpayer is given the original letter, and the inspector takes the duplicate back to the office. And then the taxpayer is being given an appeal rights if they disagree with the assessment.
Okay.
That's how the inspection is done.
All right. Did you want to talk a bit about the appeals process?
Yes.
Okay. Share a little bit about that appeals process with us.
The appeals process involves where the taxpayer, on the assessment letter, they're given the options what to do.
Okay.
If they agree with the assessment, they pay. If they do not agree, they will write a letter within 30 days requesting an informal conference. The inspector will now get back to them and meet the conferee who is going to handle the informal rest and give them dates. They will now contact the taxpayer to tell them, I have these dates. Which one is good for you? The taxpayer will respond, okay, I want this date. They will now fix the date and the time for the informal conference. The taxpayer comes in, the conferee and the cigarette inspectors all have a meeting. And the taxpayer can explain why they got the violation. If it was their first time or they didn't know, like they always say, they didn't know they had the cigarettes were supplied by the manufacturer, then we'll tell them if the manufacturer delivers cigarettes to you, you're supposed to inspect the cigarettes
Right.
to make sure you don't have violations.
Right.
But if they don't, and we get there and see the violations, they are responsible for the fine.
Right.
So they tell us whatever excuse they have. Some say they didn't know. Some say, okay, well, it was the manufacturer that distributed that to us, or whatever reason they have.
Right.
The conferee is going to decide whether he's going to reduce the bill from $5,000 to $2,500. If it's a first offense, sometimes it's waived. Maybe it's like 25 packs of cigarettes that was seen there, and the first offense, it is waived.
Sure.
But if it is more than that, because I've gotten like 1,600 packs of cigarettes.
Oh, my.
In such cases, there's no waiver.
Right.
You must pay, and you will pay on the higher level of the
Right.
500%
Right.
of the cost.
Yeah, that is a good deterrent.
Yes.
It most definitely is.
So when that happens and the conferee sees that, well, this taxpayer is ready to do better, they will reduce the fine or keep it as is. And then they will write the letter and give him another assessment letter from the informal conference saying that, no, we have decided, and this is our decision, that you are liable for this fine,
Okay.
for this penalty. And if the taxpayer still does not want to agree, they are able to proceed to the Office of Administrative Hearing.
Understood. Okay, thank you for that. Now, I have a note here that there's something called the PACT Act that has to do with tobacco tax. Can you tell us a little bit about that?
Yes, the PACT Act means Prevent All Cigarette Trafficking Act.
Nice
Yes.
acronym.
Yes. So that act actually says that all cigarettes that are sold using the phone, using mail, or using the internet are taxable.
Okay.
As such, all vendors are required by the federal government to register and file the Form 5070. That's the ATF, that's the Bureau of Alcohol, Tobacco and Firearms,
Yes.
Explosives, yes.
Yes.
So they're required to file that form to register, and they must send monthly returns to me as a representative in OTR, or to Brian Caldwell, a representative in the Office of Attorney General,
Okay.
monthly.
Yes.
We have no specifications on how the format of the form should be.
Okay.
Just give us your report.
Understood.
Yeah.
Okay. Now, is there anything else about the program or about tobacco tax that you'd like to share with the listeners before we wrap up?
What I will say is that be in compliance. If you do sell cigarettes in the district, we have regulations. Saying you did not know is not an excuse. Ignorance is not an excuse.
Right.
If you are a business owner, retailer of cigarette products, please follow the rules and be compliant. Because we are cracking down on, since the ban of menthol cigarettes, we seem to have not gotten much violations, but I know they're hiding it. So, and they should stop selling singles on the road.
Yeah.
It's not great for the kids, especially, who are busy vaping. And that it should be a responsibility of all of us, both the taxpayers and the citizens.
Understood.
Yeah.
Thank you so much for that. Well, that wraps up today's episode. We want to extend a heartfelt thank you to our wonderful guests, Mustafa Elevli and Florence Sam, for sharing their knowledge and insights about the Voluntary Disclosure Agreement and cigarette tax programs at OTR. It's been a pleasure having you both on the show, and we truly appreciate your time and expertise. To our listeners, we hope you enjoyed the conversations as much as we did, and that you'll join us for our next episode. I'm Jennifer Valentine, and thanks for listening to Tax Talk DC.
Thanks for tuning in to Tax Talk DC with your host, Jennifer Valentine. For more information and resources, visit mytax.dc.gov.